All right, traders, I'm going to show you my favorite trading strategy to profit within the stock market. It has an extremely high win rate, and this is a trend reversal strategy. This is going to get you in towards the bottom right before the trend reverses, and then you're going to be climbing and riding that stock on an uptrend to fill the gap. It's called a gap close reversal to fill the gap above. If you don't know what that means, make sure you subscribe to this channel because I am going to teach you this strategy. I'm going to consistently teach it to you because this is something that has not only changed my life, but it's changed many members within Trader Society's life. And you can use this strategy both ways. You can use it on the long side, buy and call options. You can use it on the short side, buy and put options. I'm going to show you how to use it with trend reversals, and I'm going to show you how to use it riding that stock up to fill the gap. So let's get right into it. In my last video that I posted, I taught this strategy using the short side, and you could use it both ways. So in this video, I'm going to be teaching you how to use it on the long side to buy call options. So what we're currently looking at is a daily chart on SPY. Each one of these candlesticks represents 1 day's worth of price action. These little white lines that you're seeing on the chart are a custom code, a custom indicator. And basically what they represent is they represent the previous closing price. Why do I care about the previous closing price? Because if a stock opens up higher or lower than the previous closing price, that means that it gapped up or gapped down. Why do stocks gap up or gap down in the first place? It could be due to some sort of news. It could be due to a lot of liquidity, a lot of volume trading during extended hours trading session. It could be due to earnings. There's a lot of different reasons why. And what I like to focus on is I like to focus on gaps. I like to focus on when stocks are gapping down and when stocks are gapping up. So I'm going to show you how you can use this, right? Here's some pointers that I want to bring awareness to in terms of using this. So you have to find a stock that gaps up or gaps down. You have to find a stock that is opening up lower or higher than it previously closes. When you're doing this on the long side, preferably what you would want is you would want the stock to be on a strong, healthy uptrend. See how SPY has been on a strong, healthy uptrend overall since, July, since like mid-July, it's been on a nice little uptrend right here. So what is a strong, healthy uptrend? You can say a strong, healthy uptrend is when the daily chart is consistent, and it doesn't have to be the daily, but it's when basically a stock is breaking out. It's breaking out above resistance. You can see right here, this is the resistance at 390. It breaks out, and then when it does break out, it's going to have a pullback. And a healthy pullback is when previous resistance, which was right here, turns into support. And an even stronger, healthier pullback is when higher support forms above that previous resistance, right? This is what we would call like a healthy uptrend, when a stock is breaking out and it's consistently turning previous resistance levels into support levels. Or on the pullback, if it's forming higher support, bottoming out higher than the previous resistance level, right? That would be one pro tip I would give you in terms of using this strategy. It doesn't have to be on a strong, healthy uptrend. It gets more advanced, but that's one recommendation that I would give beginners. Now, how do you use this strategy? This is what I want to bring awareness to. So take a look at this chart here. This is key, right? SPY gaps up. You can visually see on the chart this day, there's a big empty space in the chart. Sometimes it's going to be very hard to see these gaps because the gaps could be very small. It could be a very tiny gap, but those matter as well. I focus on all gaps. I focus on the small ones. I focus on the big ones. But in terms of the ones that are truly the best, it's the bigger gaps. But the small gaps matter as well, as long as they're at key major resistance or key major support levels on the daily chart. But I want to bring some significance to this because this is an amazing trade that I had this week. What I'm going to do is I'm going to show you a daily chart of SPY. As you can see right here, there's a lot of resistance at 411.74. 411.74, massive micro sell-off with big downside potential. So what if the SPY had a breakout above that resistance like it did here, and then it turned that previous resistance into support like it did here and like it did here? Well, in terms of daily charts, this is what I want you to focus on. I want you to focus on overreactions. I want you to focus on key levels. How can you tell if this is a key level? Well, you can see right here, it topped out at 411.74 and it quickly sold off all the way to 362 for new 52-week lows. So that's a key make it or break it level on the SPY. And you better believe if that resistance turns into support, the SPY is going to have a huge upside move like it did instead of a huge downside move. And the SPY has been consistently turning previous resistance into support lately on the daily, right? So here's where the strategy comes in play. the SPY finally breaks out, and it turns, as you could see, a couple days prior to breaking out, and after it started breaking out, it turned that key resistance level into support, which is bullish. Then it had a massive gap up. Now, this is your opportunity. Remember how I just told you if the SPY turns previous resistance into support, it's going to start exploding? Well, if it gaps up, and especially towards that key level, I showed you that key level on the daily, which was previous resistance with big downside potential. Guess what? This is where the opportunity opens up. If there's a gap at that previous resistance and it's now breaking out and exploding up, where's the opportunity going to be to buy the call options? When the SPY drops back down to the previous resistance level, that's when it's going to have a bounce, a reversal. Because you have to understand, these are overreactions, right? So you can do this with any stock, right? So I just want to bring awareness to this. This is a daily candle, 411.75, massive downside potential. The SPY gaps up, and the gap was right here at 411.35. See the previous closing price, this white line? There was a gap to fill on SPY at 411.35. It had small micro breakouts above this level, and as you're aware, if you look at the chart, big downside potential if it turns into resistance and breaks down, but big upside potential if it turns into support and breaks out, as you can see right here. So this is an overreaction. So you might be thinking to yourself when you see this gap up, oh man, I missed out on the move. What can I do? I missed out on the move. Should I chase the breakout? I mean, you could have bought at support if previous resistance, reacts to support. You could try doing that, but that's just basic resistance and support. I'm showing you a gap close reversal. This is the beauty of this strategy. So instead of chasing it, what you can do is, I'm teaching the long side. You could have played this short multiple times. You could see there was a gap to fill above right here with a bearish trend reversal candlestick. Could have went short using the strategy, but let's focus on the long side here. You wait for the SPY to drop back to that previous resistance level, which is now support with big upside potential. So you set your price alert at or below this gap, which is at 411.35. You set your price alert there, and then that alert is going to trigger eventually. There's a way to determine when a gap is going to fill over time, whether there's a gap to fill above or a gap to fill below. There's a way to determine that. One tip I can give you in terms of gap fills is it's different for each stock. And the chart history of that stock will give you the answers. Well, how often does it fill the gaps above? How often does it fill the gaps below? Is it pushing for new all-time lows, or is it pushing for new all-time highs? All the mathematics and all the questions to your answers, is this gap going to fill? What are the probabilities? What are the odds? Is different for each stock. And the answers are within the chart history. Go back to the max available chart frame for that answer, right? But let's stay on topic here. So what I'm telling you is, the SPY turned previous resistance on the daily that had huge downside potential into a support level. And as you know, when that occurs, we're going to see a breakout. And instead of that big downside move, we're going to see a big upside move. So what you do is you set your price alert at that gap. And when that gap fills at 411.35, that is your opportunity to buy at that previous resistance level, which should now react as a support level. Why should it react as a support level? Because SPY just had a massive breakout, and also it's been on an uptrend where the SPY has been turning previous resistance into support. That is why. But you have to use confirmations to confirm that that is going to happen, because sometimes it could just blow right through the support level. But those are the reasons why. So right here, my alert triggers, and I'm going to show you how I played this. I absolutely nailed this. I bought this at the bottom. I'm going to show you this. I'm going to pull up the chart here. I'm going to pull up, I'm going to walk you through this trade recap. So the gap waiting to fill below was at $411.35 right here towards the previous resistance level, basically at that level. The resistance level was exactly at 411.75 on the daily, right? So focus on the gap, focus on that previous resistance level, like I said, reacting as support. Look at this. You have an overreaction. When crisis hits, when massive gap down hits, it creates opportunity. Look at this. This is what you want. You want overreactions. Keyword, overreactions and gaps. SPY's having an overreaction to the upside. Look at this. Overreaction to the downside. It's gapping down. It's gapping down. It's opening up lower than it previously closes. It's having a massive gap down, right? This is what you want. You want the SPY, when it retraces back to that gap right here at 411.35 on the dip, the previous resistance level, you want it to gap down before that. You want it to explode. The higher, the better. Big upside potential, that is phenomenal, right? More upside potential on the dip. And then you want it to gap down. So what I'm telling you is, before this gap fills, preferably, you would want a gap down to occur. And the reason why is when SPY fills this gap right here, it's going to be a lot more it's going to have a higher probability, and the strategy is going to serve a purpose where not only does it fill this gap and has a reversal, but then the part two of the strategy is it's a gap fill play. If it bottoms at this gap fill level and starts to have a reversal, starts to form higher support, starts to start breaking out this key support level, which is previous resistance, it's going to start to push back up to fill the gap. And you can see right here, there was a gap to fill below at 420, right? So what you're going to want to do is in that situation, you're really going to want to have the SPY or have the stock gap down before it fills the gap, because that way, if that occurs, it's a gap close reversal, and then it could potentially start to climb back up to fill the gap like it did right here. There was a gap to fill 420, it came back to fill the gap at 420, and then if that reacts as a resistance level, it's going to have a reversal and get crushed, right? So let's get into the strategy right now. So basically what I'm telling you is healthy uptrend on the daily, previous resistance is turning into support. Overreactions, right? Key resistance with overreactions. This is an overreaction to the downside. Well, if that level, right, turns into a support level like it did right here, you're going to see an overreaction to the upside. And then right here, this is an overreaction to the downside. When you see a stock that has an overreaction to the downside, and you want that stock to have at least one gap down, right? As it's getting crushed and having that overreaction to the downside, as it's gapping down, you wait for the gaps to fill below. And this was the key gap fill level right here at 411.35. Now, what you're going to want to do is study how it reacts. So your price alert triggers, how does this react? So SPY just had a massive overreaction to the upside, then it had a massive overreaction to the downside. So the overreaction to the upside was 411.35 all the way to 430s, and then quickly dropping from 430s all the way to 410.50s in the pre-market, right? So reversals tend to happen with overreactions with the trends that I've been showing you at the key gap fill levels, right? So you want the gap close reversal, and then you want the gap to fill above when you're going long. You want those two things in your favor. So let's get into this. Let's discuss buying opportunity. So I was looking at this in extended hours this week. I was looking at this and I was saying, okay, SPY just filled the gap, and it happened during extended hours. It happened during after hours, during future hour trading sessions. And I was studying how it was reacting, and I was saying, wow, you got a lot of wicks. You got a lot of wicks at this 411.35 bullish wicks. You got a lot of support. It's already breaking out, and I'm saying that's bullish. If you see strong wicks, bullish candlesticks, if you see breakouts, and you can use multiple time frames when doing this, you could use like the 5-minute time frame. I would use the 1 minute and 5 minute time frame when doing this. You can also use the 30-minute time frame if you like. But if you looked at the 30-minute as well, we're seeing a lot of bullish pins. We're seeing a lot of reversals occurring in the extended hours at this 411.35 level. And then it has a nice little breakout to 414.88. So it already had a gap close reversal. The strategy already worked in extended hours. So if the market opens up and SPY goes back to that 411.35 level towards that zone, I'm going to look to buy calls. It already formed bullish confirmations. It already had a nice breakout to the upside. It already formed the bullish wicks. So in terms of my confirmations, they're very simple. It's candlesticks. I look for bullish wicks. I look for support, a nice consolidation level. I'm basically looking for a floor to be forming, not a roof, not a breakdown, not resistance to be forming in a crack below and lower highs. That's bearish. I'm looking for a roof in terms of what I'm buying, right? If it reacts as I'm looking for a floor in terms of buying. If it breaks down, forms lower highs, and reacts as a roof, no matter how good the support level is or how bullish I am, that will automatically make me bearish because that's a bearish reaction. But this is a bullish reaction. It's been consolidating at this level. It's been forming wicks at this level. It's been breaking out at this level. If you see that previous lower highs right here, some resistance right here, breaking out, turn into support. See how there's resistance right here and it's bottoming at the nice level. Now it's forming support and it's breaking out. That's very bullish, right? So another indicator that I can use as well for entry is the previous closing price, which was at 412.35. My previous closing prices are key levels as well. It gets more advanced determining, whether it's a stronger key level or not. But that's another reason. So when I see the bullish reaction and when I've identified it's a floor, it's consolidating, it's forming nice candles, it's starting to break out, it's starting to turn some resistance into higher support once it breaks out, it's turning previous resistance levels into support levels, right? I'm going to be looking to scale into calls. And you want to do this when overreactions occur. This is a perfect example of overreaction to the upside, previous resistance turn into support. Instead of the overreaction to the downside, overreaction to the upside. And then you have a nice overreaction to the downside. Market corrects itself. And then you have a nice gap to fill below here, which was previous resistance level. And it's very likely to have a reversal at this level because gap close reversals. And then this is the key point. This is the second part. You always want this as well. Gap to fill above. There was a gap to fill at 420 right here. There was a gap to fill at 422.14 here. There was a gap to fill 427.89. That's what you want. It's a two-part strategy. Gap close reversals are great, but what I'm telling you is they're a lot better if there's a gap to fill within the side of the reversal you are playing, because then the strategy serves a purpose. If I were to buy right here at the gap close reversal, it would be a gap close reversal and it'd be previous resistance reacting as support, which is great. But what can I add on to make the strategy better? Can I add on indicators? No. What I can add on is if there's a gap to fill above, because the strategy would then serve a purpose. Gaps tend to fill over time. And if the SPY is bottoming out at a previous resistance level, turning that into support, and it recently had a massive run up from that level with the overreaction, and there's a gap to fill above, odds are it's going to start to, bottom out at that gap with the bullish confirmations, and then it's going to try to fill one of these gaps, whether it's 420, 422. You take it one step at a time. But again, I'm scalping at these key levels. I'm not holding. You can swing trade this strategy. Basically, in order for me to swing trade with this strategy, I would need the daily candle to be bullish, which is not determined until the market close. So when I enter a swing trade, I would need a bullish candlestick on the daily chart, which is determined like the last couple minutes into the close. And if it's bullish on the daily chart and I like the setup and it has, all the high qualities I'm looking for in a swing trading setup, then I'll look to swing trade. And you can even look, it works right here in terms of swing trading. We have a bullish trend reversal candlestick on the daily right here. And then this is at the gap, and SPY rockets the next day. The strategy literally worked with the swing trade. You wait until the market closes. I'm telling you, you can swing trade the strategy if it closes the gap and reacts as a bullish trend reversal candlestick on the daily chart, which is not determined until the close. So this candlestick can look bearish or bullish any time of the day. It's not determined until the close. So in order for me to swing trade, it's based off a daily candle, right? And along with all the variables I gave you. Now, in terms of the day trade, I explained to you, I'm basically looking for a floor. I'm looking for a floor. I'm looking for consolidation. I'm looking for bottom wicks. I'm looking for the buyers to be coming in. I'm looking for the volume to be popping up. I'm looking for previous resistance turn into support. And then I'm looking to buy into the dips, buy into the red candles when it's confirmed. And I'm playing closest at the money strikes that are barely out of the money. That's what I'm doing. I'm scalping with this strategy. I explained to you what I look for in terms of swing trading. Now, in terms of scalping, I'm getting in, I'm getting out. So what I ended up doing was, and this was alerted very early. This was literally, let me extend this here for you guys real quick. So this was alerted for you guys very, very early within the Discord server on August 24th. I sent this out at 5:35 a.m. I'll be focused on buying SPY call options today on dips as long as we stay above 411.35. It's overall bullish. The reason why I said that is because of all the reasons I just gave you. That is why. Everything I just said, that is why I wrote this at 5:35 a.m., right? So I'm teaching you it. And then I ended up buying calls. I bought calls very early into the morning. I was down a little bit at first, and I averaged in for a best entry because I was very confident in the setup. So, like I said, I explained to you why I bought the calls, and I added into this dip. My max risk was going to be below 411. And then it just kept rocketing. And then if it turns that previous closing price into 412.35 right here, the previous closing price, if that reacts as a support level, SPY is going to continue to uptrend. And I made a nice quick 40% return on that within like 5 or 6 minutes. I alerted that trade real time within the will alerts section, as you could see right here. If I scroll back and find this, that was on August 24th, I believe. Let's see. August 24th. Yeah, so right here, August 24th, this was alerted literally towards market open. I got in at $1.39. Man, if you were to hold these, oh my gosh, they would have been worth a fortune. But it was nice. It was a nice quick 35% win. And then a re-entry could be at the previous closing price if that reacts to support. But yeah, those are some of the basics, right? So those are some of the basics. I want to give you that third eye. I want to show you what it is that I look for charts. And then, I'm not riding this all the way back up to fill the gap. I'm just taking an advantage of that gap close reversal, and then I'm taking an advantage of that gap starting to fill. So for those of you who are trying to aim for bigger wins, maybe you're trying to hold longer, what could be one logical tip I can give you in terms of profit taking? So the daily chart is going to be showing you key levels to be locking in profits. It's really going to be showing you where a lot of resistance is. It's going to be showing you key levels where you should sell no matter what, even if you're bullish. So for example, like 415.42 is a lot of key resistance. That would be one key resistance level to be selling. Another tip I can give you is trends, short-term trends can reverse on the SPY. So a healthy uptrend is when previous resistance, so like write this down, this is key. And you can do this with like the 5-minute chart. You can do this with like the 5-minute chart when you're doing it. But let me see if I can find a good example to show you in terms of like locking in profits. So key levels on the daily, key resistance levels, you'd be selling there. Don't be hoping for, buy the dips and then sell into the rips. Don't be hoping for massive breakouts. So basically the trend can start to reverse for the short term. And if this occurs, you're going to want to get out a lot of size. If the SPY breaks out, so right here, there was resistance here at 412. It had a breakout. If it turns, and when you're doing this, I would use the 5-minute chart. This is for those of you who want to hold a little bit longer. When it comes back down, if it turns that previous resistance into support, which it did, you could see bottom wicks, bottom wicks, bottom wicks. It's forming a floor. I know this looks like a roof right here, and this is a roof right here, but you have to understand, it just had a breakout. There's resistance here, and it's forming a floor. It's forming a floor, a bottom floor at the previous resistance, which is technically bullish. So as long as it holds that floor at the previous resistance level, SPY is going to try to break out and go higher. And then you can see right here, this was the previous resistance level at right here, and it bottoms higher at the previous resistance right here into support. So basically what I'm telling you is when SPY breaks out and it's going to have a pullback, if it bottoms at or higher than the previous resistance level, then it's bullish. But if it starts to crack below, so what I'm telling you is if it starts to crack below previous resistance, which is right around here at like 412, or if it starts to, so say it breaks out right here like it did, it's going to pull back. If it starts to crack below, we'll raise it to like 412.50. Then the trend is going to start to reverse. Then the bulls are going to start showing the backside of the move. And then the bulls, then the bears are going to start showing the backside of the move, right? So the trend can break when previous resistance no longer reacts to support. But if you were to use the 5-minute chart in this situation, it never happened. There really wasn't a strong logical reason to be selling. I sold too soon because that's just how I am. I'm a scalper. I get in, I get out. I don't have regrets of selling too soon. My style of trading as of now isn't holding. I don't like holding for a very, very long period of times. I like timing it perfectly. I like getting at the best entry, getting in, getting out, resetting at the best trade. I can literally re-enter right here on the trend. When it breaks above resistance, instead of buying into this breakout and chasing it, I wait for it to drop back to the previous resistance. And then if that reacts to support level, which it did, you can buy the dip. That's another way you can do it and continue to go with the trend. But what I'm telling you is the trend can reverse when the previous resistance no longer reacts as a support level. So let me show you an example of that. This is your new resistance level right here, and this is your new resistance level right here. Why? Because it pulls back here, it pulls back here. Right here, it bottomed higher than the previous resistance, which is extremely bullish, and then it goes higher. But then you could see this is when the trend flips. Write this down. This is resistance, this is resistance. SPY just had a break above resistance. You could see it tried to form support, which is bullish, but then lower highs started forming. If lower highs start forming, that means the bears are going to attempt, not take over, but they are going to attempt to crack the previous resistance. Once the previous resistance on an uptrend, when SPY's on an uptrend, it's consistently breaking out, it's having a pullback, it's turning previous resistance into support or forming higher support above the previous resistance, it's bullish. The trend continues to go up. Now, this is how you can identify a trend reversal and in terms of when I should really close out this position. This right here is your new resistance. Has a pullback, this is your new resistance on the 5-minute. Has a breakout, bottoms at previous resistance, this is bullish. However, lower highs. When lower highs form and it fails to go back to the highs, that means the bears are going to attempt to break the trend. They are going to attempt to show the backside of the move. And this is when the backside of the move occurs. It truly occurs and is truly confirmed when the previous resistance level fails to turn into the new support level. It tried to turn into new support right here, but as you can see, It failed. Lower highs said it's going to come back down, but the bulls could have combated it, but they didn't. It cracked through, and then right here, this is your confirmation that the trend has now flipped. The trend has now flipped, and you must exit right here. This is your confirmation. This is now bearish because previous resistance failed to turn into support. Lower highs have formed. It cracked below. It popped back up. Previous resistance is now resistance. When the previous resistance is now resistance, after it breaks out and then it cracks and previous resistance is now resistance, it's no longer support, that is when the backside of the move occurs. That is when the bulls get trapped towards the highs. And as you can see, SPY started selling off very, very hard. So there you go. That's how you know when to begin selling. You can ride the trend, and then right here, you say, oh, wow, this is great. SPY just had a breakout. It's turning previous resistance into support. You should be bullish right here, but then it's forming lower highs. So then you go, well, it's not confirmed bearish yet, but the bears are going to attempt to crack support because it did form lower highs. Also, if you look at the daily, there's a lot of resistance at 415s, but anyways, they're going to attempt. And then you can see right here, it cracks. And then when it pushes back up and the top of that candle is at or lower the previous resistance level, which is your previous support right here, now resistance. So previous support, now resistance, previous resistance, now resistance, bearish. Previous support right here, now resistance, bearish, the trend flips and it starts to sell off. So there you go. That's how you kind of know when to be selling if you kind of want to hold longer. And you can do that with the 5-minute chart. So those were some of the basics. I wanted to kind of go over the basics and give you the gist of the strategy. So it's called a gap close reversal to fill the gap above. So just to give you again some minor tips, let's just kind of walk through this here one more quick time. What you're going to want, and again, this isn't required, but preferably you would want a nice consistent uptrend. You would like a nice uptrend where previous resistance is consistently breaking out, and then when the stock pulls back, it's forming higher support above the resistance, or it's going back to the previous resistance level and forming support there. So the previous roof turns into the new floor. The trend is continuing to be bullish, right? And then another tip is overreactions. So again, key levels. My key levels are gaps and my key levels are overreactions. This is a key level, 411.74. Why? Because when the SPY topped out at this resistance level, it had a massive sell-off. That's what I love. If you want volatility, if you want the big moves, it's all in the daily chart, in the gap levels. So key levels for me are the gaps, and key levels for me are where overreactions can occur. I'm well aware if this resistance level reacts as a support level, and SPY's trying to break out, then instead of that big downside move, there's going to be a big upside move. And then this is where the opportunity is created. When the big upside move occurs with the gap up, right? So basically, this gap up created the opportunity. It was so perfect. It was just such a perfect setup. And the reason why is, again, a key resistance level, massive overreaction to the downside, turns into support, breaks out, massive overreaction to the upside. You want those overreactions to be happening in a very short, rapid period of time. You want that volatility. That's going to make these options be printing, right? And then this is what you want. A gap up. You want to gap up at the key levels. And then when it gaps up, like I said, wait for it to gap down. When it's gapping down, that's when you get excited. And then once the gap fills, you set your price alert. Once the gap fills, look for the reversal confirmations, look for the floor to be forming, look for the support to be forming, look for previous lower highs and previous resistance to be turning into support. Buy into the dips, sell into the rips, and then I showed you strategies using the 5-minute chart where you know when to sell as well, if you want to hold it a little bit longer. And then what you're doing from there is once you've identified that it's a reversal level now where previous resistance is going to react to support, and was very likely to do so because it had such an overreaction to the upside and such an overreaction to the downside, I would be extremely confident that a reversal was going to occur at this gap fill level because it had such a strong breakout. Previous resistance turned into support, and then it quickly came crashing down. I would rather have it quickly crashing down to fill the gap than slowly crashing down to fill the gap. The opportunity in reversals is in overreactions. I would love the SPY. The quicker it crashes, the better. The bigger the gap downs, the better. That's what I want. I want those overreactions. I want those crises. That's where the opportunity is. It's within crisis. It's within overreactions. It's within the volatility. when it hits those key levels, those key gap fill levels, play the reversals. Wait for the confirmations. Once you get the confirmations, buy the dips back towards that key gap fill level. It literally bottomed in the pre-market at 410.50s, and then on this day, it bottomed at 411.39. I was buying at 412, and I was adding at the lows. It's crazy. The gap was at 411.35. The low of day was at 411.39. It got you in at the exact lows. So it's truly a life-changing strategy. And then once you've confirmed it's a reversal, you start to play for the gap to fill above using the 5-minute chart. I explained to you how you can sell that position safely. And then you can also use a daily swing trading strategy where if the SPY forms a bullish candlestick like it did right here, then it's going to start to rocket up, right? And just study patterns. The chart is going to show you patterns. Look at this pattern. You have two slanted red days at this level, right? At the same price. Look at this. Look at these ovals. You tell me, what do you see? If history were to repeat itself, which is another strategy I have, notice how everything I'm stacking is within the chart. It's not in the indicators. I'm stacking everything with the chart. You can do this on daily candles. You can do it on multiple time frames. Look for patterns within the chart. It's all within the chart. It's not within the indicators. Look at this. You have a slanted downtrend, and then you have a slanted downtrend. See how this is like identical, this little pattern right here, this little pattern right here? What happens on the third day? The third day, SPY gaps up, it goes green. On this day, it may have not gapped up, but what it did was it went green. And then what happens on the fourth day? SPY goes even higher. And then as you can see right here on the fourth day, SPY went even higher. I know it looks a little different, but if you just compare this to this, history repeated itself for 4 days in a row. So imagine confirming. That's another strategy I have where I identify history and I use confirmations to confirm that that history is going to repeat itself using candlesticks, using price action, using the charts, using the key levels, support, resistance, using, okay, if previous resistance reacts to support, then it's bullish. If resistance reacts as a resistance or it's forming lower highs, then it's bearish, right? You can confirm, you can identify patterns, you can identify trends and confirm that history is going to repeat itself, right? And like I said, in terms of using the strategy on the daily chart, you could have said, wow, the SPY bottomed at this key gap level. This is a green bullish trend reversal candle. Check this out. You see this bullish candlestick on the daily? This candlestick recently formed on the 1-minute chart at a key support level on the SPY, and look what occurred. It had a reversal as well. It's a very nice candlestick. That same candlestick on the daily formed basically right here. I believe it was the 5-minute time frame. Let me double check that. Was it the 5-minute? No, it was the 1 minute. It's not exactly the same, but it's very similar. And it formed with an overreaction to the downside. And then you can see here that was the candlestick, and then it exploded up. And then the same candlestick right here was red, and then exploded down. I went over that in my previous video, but you get the point. I'm stacking everything in my favor. I'm stacking all the charts in my favor. I'm stacking all the odds, all the probabilities in my favor. And that's how you use it on the long side. Now, what I want you to understand is we may be trading at the best setups at the best prices, and gap close reversals are amazing to then play for the gap to fill above. Obviously, we're not fully riding it for that gap to fill. I showed you ways to sell and ways to strategies if you are looking to hold longer, and just make sure you're selling into rips, not dips. Anyways, like I said, that is the long side. And what I want you to understand about this is if that key level reacts as a resistance level, so like no matter what you think, if this 411.35 breaks down and reacts as a resistance level and it's forming a roof instead of a floor, the SPY is going to get crushed. Instead of the big upside move that you're looking for to fill the gap, it's going to have a nice downside move. So you need to respect the strategy. Your mindset should be, I'm getting in at the best price. And if it starts to go lower than that price, if a roof is forming at that price, if lower highs are forming at that price, I must not hold this position. I must quickly cut my loss and respect the fact that it cannot work at the best possible price, right? That's something that you must do. Because if the trend reversal cannot occur at the best price, it's going to continue to sell off very, very hard. And you don't want to get stuck holding and hoping. So make sure you cut your losses quickly. We're trading the best setups at the best prices. It's not going to work 100% of the time. You can lose a lot of money if you hold a loss for a long period of time, especially if it's a close expiration, percentage-wise, and especially if you're taking big position sizes with options. So just understand the fact that I'm giving you what you can do best, but if it reacts the opposite of what it's supposed to look like, and you're not in the trade, then don't take it. If it reacts the way it's not supposed to look like and you're holding the trade, say you bought into the bullish confirmation, it's looking good, but then it flips and it turns into a roof and it starts cracking, you must respect the fact and get out. And now that doesn't mean to switch to puts and then go bearish, right? That just means that it's bearish and it can really sell off rapidly, but it can also flip. There's a more advanced, it's more advanced in terms of, well, I just, sold my calls and it flipped bearish. Should I now buy puts? That's a more advanced lesson. I do believe in switching sides, but not all the time. That's a more advanced lesson. But the probabilities were very high because this was the first time it came touching back to fill the gap. If it's the first time and it touches and fill the gap, then it's very likely it's going to work out. If it's the second time, this was like the second time right here, then don't play it. If the gap already filled, then I wouldn't play it. That's where the strategy gets different and more advanced. So only play the first time the gap fills. Don't play the second time. If the gap is already closed, just play it that once. If the gap is already filled, do not play it. That's what I'm telling you. If you play it, it's just basic support and resistance. But remember, overreactions and reversals tend to occur once. They tend to occur once with crisis, with overreactions to the downside, overreactions to the upside. And you could use what I just taught you and flip it. So if you want to learn the downside, the short version, the put side, I taught that in my previous video, right? But I'm going to be wrapping up this video lesson. I hope you guys enjoyed this and learned a lot. I did post a video earlier this year. This gap trading strategy can make you rich, and it was the same exact strategy. And like I said, I used this strategy to make a 40% return within minutes trading the call options. So it works both ways. My preference as a trader is more of the put side, more of the short side. That's what I do best. But in situations like these, no matter what I'm best at, I will focus on the call side. These are very rare opportunities that come around. And if you were to just have, and this is something I do, I have one portfolio dedicated to trading the best setups at the best price. So what I just exposed you to is basically the best setup at the best price. It does not get better than that, right? That's the best way to be trading. And I have one portfolio dedicated to just trading the best setups at the best prices. And for me, those are mainly gap close reversals to fill the gap below, gap close reversals to fill the gap above. You could trade it both ways, calls, puts, calls, long, short, right? And then I have another portfolio dedicated to like price action, to like support, resistance, history tending to repeat itself, overreactions, say a support level reacts as a resistance level, big downside potential instead of big stuff like that. I have another portfolio where the setups aren't as good, but they are good setups. They're not 100% the best compared to what I just taught you. And I have a separate portfolio dedicated to that, where I just scalp in and out very quickly. But in terms of the best setups at the best prices, what I just taught you, these are meant for slightly bigger wins. These are meant to hold a little bit longer. I showed you how you can sell using the 5-minute chart and scale out, and you're always scaling out into the rips, not the dips when buying. And I showed you how you can even add to a position. If previous resistance reacts to support, you can add, but you don't want to keep on chasing in terms of ads, right? But yeah, that's the best setup at the best prices. So that's for beginners, I would focus on this. If you just have one portfolio, I would just focus on this. If you want the best results possible, I would focus on these strategies. I have a separate portfolio. It's more for like advanced professional traders, more ideally above 25K margin accounts. That is just purely scalping price action. I don't think it's the best thing to be doing, but if you're trading the trend, it can work amazingly in and out with the margin account. But yeah, this is how you trade the best at the best prices. If you do want to be a part of Traders Society, where you will learn everything it is that I've learned throughout my journey of the stock market, throughout the past 10 plus years trading within the stock market. If you want to learn how to master price action, the unique gap trading strategies that I've created, people are wondering, well, how have you created these strategies? By using the chart and by using history tends to repeat itself. So if history repeats itself, how can I confirm that that history is going to repeat itself? And I figured out how to do that. I figured out how to identify if history is going to repeat itself. And I'm going to show you how to confirm if that history is going to repeat itself. Without that confirmation, it's not going to repeat itself. I'm going to show you how to trade this unique gap trading price action strategies. The reason why I love it so much is I've studied that stocks tend to have reversals at my key gap fill levels. When I use this confirmation, I've studied stocks tend to fill the gaps when you use this key confirmation that I'm going to be showing you all within the program. So yeah, I'm going to show you everything as I've learning. I've dedicated the past decade of my life to mastering these simple strategies that I want to put you onto. I'm telling you, it doesn't get better than this. These are the best ones. And I'm also going to show you, most important thing as well, risk management and position sizing, money management, risk management, and position sizing, psychology and mindset training, all within the video lesson library. And then of course, you're going to get access to the live trading sessions that I do every single day towards market open. That's where you're going to be able to listen in live on voice, my live trading commentary. You're going to get to see my charts, see me trade live in real time. You also get access to the Discord server of people who are serious about dedicating their lives and mastering the simple gap trading strategy. So imagine if we had a bunch of people watching these, setting price alerts, finding these setups, sending out the price alerts. When the price alert triggers, they alert it in the chat, and then they wait for confirmation, and they alert their trades. They trade the best setups at the best prices. And then as a team, we're crushing these setups together, right? So it's a very unique community. It's a community that is dedicated to a very specific set of strategies. It's very simple. And you get access to that networking opportunity in that Discord server and that community of everyone's experiences using these strategies. And another huge benefit is we're all going to be on the same level or a higher level of education because everybody has access to that video lesson library, right? So that's what you're going to be getting access to. You also get access to all my real-time trade alerts, all my real-time buys and sells, all of my call option trades and put option trades, what contracts I'm buying, everything is that I'm doing with this strategy. So there's a lot more to it. If you want to learn more about it, it's the first link down below in the description. If you are serious about taking your education to the next level, if you are serious about taking your trading to the next level, this would be the right program for you. And I would encourage you to join right now. It's the best time to join. It's a one-time fee and you get lifetime access. And this is, like I said, it's the best time to be joining because it's a one-time fee and it's a lifetime access and you're grandfathered in for life. As time goes down, it's going to be a lot more, as time goes on, it's going to be a lot more expensive, right? So there's a lot more included to the program. All the information is explained in the first link down below in the description. Just to show you some of the results, I'm telling you, within this program, we've had many people make over 6 figures just this year alone. But just to show you some recent results, I mean, you can see right here, we had a guy, Nick. He ended up making, this is insane, man. He ended up making a 500% return on his portfolio. Those results are unheard of. That's outperforming hedge funds. Like it's absolutely insane the percentage returns you could make using these unique trading strategies. If you know how to use them, you stop out quickly, you use the risk management, you do everything you're supposed to do, you're disciplined, right? It's just amazing what you can do with this strategy and trading options, not shares. If you reduce with shares, you're not going to make much money. You're not going to make much money trading these mid cap, large cap stocks with shares. You can use this strategy with penny stocks, but the options are going to be so much more profitable. And I find it a lot easier to trade the options than I do penny stocks. Options are like penny stocks on crack. So anyways, big shout out to him, man. He's already recommending people to join the Discord and join the Trader Society. So thank you so much for doing that. I truly appreciate it. In terms of my portfolio, one of my accounts is up 126%. It's on a 9-day green streak. I have another account that was up over like 60,000. It's like 60 grand this week. I took out like 35K profits from this week. And we have people making crazy results, man. I'm telling you, I've seen some crazy results in here. This $5,000 profit, I mean, that's more than 13 times the cost of the program. It's crazy, man. I have people joining the program and they make back more than the cost of the program before they actually even join it. And then when they join it, they're like, man, I regret not joining because I just made like 10 times the cost of the program the first week. This is inspiring. I had a guy, there's a guy named Ricky Garcia. He's been following me on Instagram for years. He ended up joining the program recently and turned $5,000 into $35,000 with SPY put options on Friday using the same strategy I just taught you, using the same exact strategy, just the inverse on the short side, on the put side. We crushed it on Friday using the strategy on the put side. You can go back and watch my previous video. It's truly inspiring, man. It's truly inspiring what people have been doing. So if you do want to be a part of it, guys, it is the first link down below in the description. I'm going to be signing off. Thank you so much for using this Saturday night to invest into your education. I will see you guys within the next video. And for those of you in Trader Society, I will see you on Monday live at Market Open.